Good morning, Gav. How you going?
Yeah, good. Bit cold down here.
Yeah, I bet it is. Mate, another interesting week in the markets. Lots of things happening.
Yeah, it's surprising it hasn't been more volatile with all the noise out of the Middle East, but that might still be to come, I think.
Yeah, a lot to play out there. I think markets are probably undervaluing maybe where the potential outcomes that could come from all this, what it may do to markets globally.
Yeah, certainly a shock to oil, which has already shot up, will flow through to inflation. It flows through to growth. It flows through to everything. So, yeah, I think our market's being a little bit too not enough cautious at the moment, I guess you'd say.
Yeah, a bit of complacency, and there's still a
Complacency,
lot
yeah.
of probably buying. Some of these index funds still pushing stocks like a CBA, Wesfarmers, which have become, and probably Telstra as well, have become really big. Sort of passive funds have been buying those due to their index weightings, and I think really driven them to very unrealistic levels. Which this passive buying, these guys are holders; they're not likely to sell, so we're not likely to see a lot of pullback unless we start to see a big drop in the market. Then the passive funds probably are forced to sell. So some interesting
Yeah.
times.
Certainly in this environment, there's opportunities for selling calls, which we recommended a few weeks ago, and a couple of those will have closed out yesterday with the monthly options expiry. So I think at the
Yep.
last session we suggested selling calls in QBE, which was up around its consensus targets at the time. I think we suggested the 24.50 from memory
Yep.
and
Sounds right.
about 20 cents. So that will have expired worthless yesterday. So yeah, nice easy trade last month that worked out really well for those clients that took it up.
Yeah, definitely. And those insurance stocks probably still look a little bit expensive too. I mean, certainly not value to buy them. So maybe some more calls could be looked at.
Yeah, you can certainly look at the 24. I don't think there's much premium left than 24.50, but certainly the 24, there'd be some premium in there if people wanted to do it again for the month. So yeah,
Yeah,
nice
yep,
trade.
good idea. And the other one I think we put out last week or last video we did was buying some index puts in the XJO out in July as a bit of a market hedge. So we haven't really seen a big drop in the market, but we've certainly come back about 100 points from where we topped out. But I think there's still potential for maybe another 100 or so points if we start to see some profit warnings through the early part of July.
I think having a small hedge in place at the moment with global instability and really high prices is a smart thing to do.
Yeah, definitely. And to me, I think the downside is really being underpriced. Buying out of the money puts maybe 100 or 200 points below current index level is actually still really cheap. So
Yeah.
it is a good bit of insurance if you do think there could be any sort of risk of bad outcomes with all the Middle East matters and all Trump's other battles that he's fighting. Then I think some cheap puts would be a good way to go.
Yeah, I'd agree with that. A couple of other ideas for this fortnight. I'll just open my screen up page,
Yeah, fantastic.
and we're away. Where will we start? We'll start with Fortescue.
Yeah, look, Fortescue is an interesting one. Stock broke under $15 in the last couple of days, down a little bit this morning. I think every time it gets under 15, it seems to find some buying. And if you look back over the charts over the last sort of year or two, $15 would be a great place to buy it. If you'd consistently bought it every time it had got to that level, you'd have done okay. So I thought maybe selling a July 14.50 put um, out to, I think it's the 17th, yeah, 17th of July expiry. So just checking my calendar, you'd get around 35 to 40 cents in premium there.
Oh
So
wow.
if you did do that, you're getting into the stock at $14.10, $14.15 if you're exercised. I think that'd be a very attractive level to pick up the stock at. So if you think any chance of the general tariff battle settling down and becoming not as extreme as Trump originally sort of pushed it, then Fortescue at these levels looks pretty attractive.
Yeah, I think it's if you haven't got it in your portfolio, it's a good time to be buying it. That's for sure.
Definitely, definitely. And what did you have? What were you looking at, mate?
I was looking at MCore. It's got a similar sort of target, a lot of buy recommendations on it. It's down around the $14 mark. You can see its consensus price target's around $17. You could sell
Yep.
the $14 put for next month for around 28 cents, which means you're getting into it for 13.70, 70.02 around there, depending on what the premium is you get for it. It pays a solid dividend. It also doesn't look out of place in a portfolio. Yeah, I don't mind this stock at all, and particularly given there's a bit of premium in the options, it's not a bad one to look at as well.
Yeah, I think selling a put in Amcor is a good trade. It's a good solid stock, and yeah, those targets look pretty attractive. So
Yeah,
you could easily see the stock north of 15, 50, $16 on any sort of tick
yeah,
up there.
yeah.
And it's probably a stock the market might move into as we start to see the end of financial year. It could be a stock that picks up a bit of buying as people take profits out of some of these market leaders.
Yeah, I mean that you're right, actually. So many stocks and high average PEs, you're really looking for these quality stocks that have been beaten up to where to put the money. So I think it's only a matter of time before they start to see some money flow into them.
Yeah, good thinking. Now, the other one we had this week was Santos. Obviously, Santos has received a takeover bid, a little bit opportunistic bid. And for those that don't follow Santos, a tough one to launch a takeover at due to the South Australian government having sort of a final say in shareholdings sizes in Santos. They've had restrictions on it for years and have really used that ability to restrict major shareholders or anyone picking up, I think, more than 20% of the stock. They've used that to sort of block Santos from being taken over. So
Yeah,
I'd be very surprised if they don't do the same again. They really want to keep control of the gas in South Australia, and they don't want to lose it to an international player. So Santos, to me, I think is worth, if you've long the stock, you'd probably look at selling it or at least selling some covered calls. And you could even look at buying a bit of put protection if you don't want to sell the stock. Maybe use this strength to buy some puts just to hedge your position. I know I exited my holdings in Santos this week on the back of the move up. And I think if they do get a takeover, it'll be a long played out affair. So I think the money could be moved to somewhere better very quickly.
totally agree. I had a couple of clients sell out of it earlier in the week when it was announced. I mean, that chart's a little bit old, but it's trading well above that at the moment. So I think
Yep.
I can't see Australian government approving with the gas problems that's on the East Coast. I can't see the government approving this one, but who knows? But given it's had a good jump, good one to either sell calls or take profits.
Yeah, good thinking. Mate, well, that's probably it for this week. Obviously, we had a US holiday last night, so we'll bit of a quieter day for us in the market.
Mm.
But lots to play out over the next week as we lead into end of financial year.
Yeah, we'll see how we go, and I'll talk to you again soon.
Thanks, mate. Have a good one.
Right, you too. See you later.